Hello, Professor Derudas. This is Diego.
Hi, Diego. Hi. I'm glad I made it. I just ran back from teaching, so I'm glad I haven't delayed you in any shape or form.
Don't worry. We're already online preparing the streaming. I will just verify 2 seconds if we are right on YouTube. And afterwards, our president, Dr. Juan Manuel Díaz Granados, who is connected, will give us a little brief introduction. And afterwards, we'll move on with the event.
Perfect. Thank you. Thank you.
Thanks for being here.
Thank you for inviting me.
Estamos en vivo en YouTube, doctor Juan Manuel Díaz Granados.
Sí, señor. Doctor Diego, en el orden, ¿quién va a hablar de primero?
Habla primero el profesor Leludas, doctor Juan Manuel.
Ok. Y luego usted, doctor José Ignacio, ¿cierto?
Sí, señor. Y vamos a alternar en todo caso.
Ok, muy bien. Vamos a dar unos pocos minutos para que la gente termine de conectarse
de ingresar
al seminario.
Muy buenos días a todas las personas que se han conectado a nuestra tertulia del día de hoy, el tercer foro de Acoldese Joven. Sean ustedes muy bienvenidos. En cuestión de unos pocos minutos estaremos dando inicio a la sesión del día de hoy. Entonces, a todos una muy cordial bienvenida, unos muy buenos días. Diego, ya estamos transmitiendo también en YouTube, ¿cierto?
Sí, señor.
Ok, perfecto. Entonces también estamos haciendo la transmisión en vivo de esta tertulia a través de nuestro canal de YouTube de Acoldese. Entonces, las personas que no alcanzaron a inscribirse en el evento nos pueden seguir también a través de nuestro canal de YouTube de Acoldese. Doctor Juan.
Muy bien.
¿Damos un minuto más o ya?
Yo creería que a las 5 empezamos, o sea,
sí, señor.
En breves segundos. Para efectos de la presentación, le pediría al doctor Diego y al doctor José Ignacio que activen su cámara, por favor. Ok. Muy buenos días. En nombre de la Asociación Colombiana de Derecho de Seguros, les damos la bienvenida al ciclo de tertulias de Acoldese Joven. Acoldese Joven es un programa relativamente nuevo que ha venido liderando en nuestra asociación el doctor Diego Coronado. Y este es el tercer foro que organiza Acoldese Joven. En esta oportunidad nos complace enormemente contar con expositores de la más alta calidad. El tema en esta oportunidad será el seguro aeronáutico. Es un tema muy especializado, muy interesante, que comprende aspectos no solamente de los seguros de cosas, sino también de los seguros de responsabilidades, y tienen una aplicación cada vez mayor. Obviamente, cuando termine la pandemia y los vuelos empiecen a regularizarse con mayor frecuencia, si sigue la tendencia del mercado aeronáutico, vamos a tener cada vez más medios de transporte y cada vez más automatización en esa materia. En el día de hoy, el doctor Diego ha logrado que nos acompañen dos profesores de las más altas calidades. En primer lugar, el doctor George Leludas. Él es profesor asociado de la Universidad de Swansea, abogado de la Universidad de Atenas, magíster en Derecho Comercial de la Universidad de Bristol, magíster en Derecho Aéreo y Espacial de la Universidad de McGill, doctor PhD en Derecho Aeronáutico con énfasis en responsabilidad y seguros de la Universidad de Cambridge. Es una de las personas más calificadas en esta materia. En segundo lugar, nos acompaña el doctor José Ignacio García Arboleda, profesor de la Universidad Javeriana y de la Universidad de los Andes, instructor de la IATA, socio de su firma García Arboleda Asociados. Él es abogado de la Universidad Javeriana, especialista en Derecho Administrativo también de la misma universidad y magíster en Derecho Aeronáutico de la Universidad de Leiden. La organización de este evento va a estar a cargo de el doctor Diego Coronado, quien dirige Acoldese Joven en nuestra asociación en Acoldese, quien va a explicar la manera como va a funcionar este seminario, en el cual vamos a contar con el soporte de traducción simultánea. Así que dándole las gracias muy especiales a los expositores, al profesor Leludas y al profesor García, le doy la palabra al doctor Diego Alejandro Coronado.
Gracias, doctor Díaz Granados. Muy buenos días para todos. Para mí es un motivo de felicidad darles la bienvenida al tercer foro de Acoldese Joven, una introducción al seguro aeronáutico. La dinámica del evento, como fue anunciado, va a ser en inglés con la opción de una traducción simultánea en español, para lo cual es necesario asistir al evento mediante la plataforma Zoom en su versión de aplicación, sea esta para los dispositivos móviles o para los computadores. De modo que si están conectados en la versión de Zoom, que es de navegadores u online, quizás no les aparezca la opción de elegir el canal en español. Este lo encontrarán en la parte de abajo, en los 3 puntos, donde dice más, o en inglés more, y les da la opción de elegir interpretación, canal en español. Ahí mismo pueden elegir si desean escuchar solo al intérprete, que es Alejandro, que nos acompaña de AT Medios, o si también desean escuchar al mismo tiempo el audio original de la conferencia. Si tienen alguna duda técnica, algún problema, se pueden contactar al correo de Acoldese o escribir en el chat o en la caja de preguntas y de inmediato Andrea Arcila de nuestra asociación los podrá asistir. De igual manera, el evento está siendo retransmitido por nuestro canal oficial de YouTube y este quedará grabado para quienes no pudieron asistir o están un poco apretados en tiempo en inglés. El canal de YouTube no permitirá hacer una grabación con la interpretación al español. Sin mayor preámbulo, cambiaremos al inglés y les agradezco a todos su presencia el día de hoy. So for everyone who is joining us today, good morning. For me, it's such a pleasure, and I'm very proud to be presenting our first, well, and I think it will not be the last event in our association in English. It's great to host our third forum of Young Acoldese, an introduction to the aviation insurance. Today, I must recognize it is such a special day for us. We've done a valuable effort to count with 2 wonderful speakers, international experts on aviation insurance matters, and also very short, but I would like to thank Professor Juan Manuel Díaz Granados, who has supported this event, and of course, everything to make this possible for today. As a personal motivation and explanation of why we've chose to do this event today is because, well, you know, and each, a personal academic background, there are, of course, always some professors that you will always remember and some lessons that really leave you something in your heart that you will like to share with others that love and like also the insurance matters. And this happened to me with Professor Leludas in his lessons during a course in the International Air Transport Association, IATA, and also happened to me with Professor Garcia Arboleda, who taught me in the Pontificia Universidad Javeriana. So this was an academic experience that I really wanted almost every member of our association, and especially the members of Young Acoldese, to have today. So moving forward, I just would like to say that this event will be in 2 hours, more or less. But since we are having a simultaneous Spanish interpreter, we'll do a small break, a pause. It could be just 3 or 5 minutes break, so that the interpreter could rest a little bit and be with us also during the second hour. So for those who are joining from another countries, I will just briefly present our speakers today. First, Professor George Leludas, who joined the Institute of International Shipping and Trade Law in the Swansea University in 2011. He's a graduate from the National University of Athens, and he holds an LLM degree in commercial law from the University of Bristol, and also an Air and Space Law LLM degree from the University of McGill in Canada. Also, he completed his PhD degree in air law with emphasis on liability and insurance law at Trinity Hall from the Cambridge University. From another side, we have the pleasure to come today with Professor Garcia Arboleda, Jose Ignacio Garcia Arboleda. He is a lawyer graduated with honors from Pontificia Universidad Javeriana in Bogota, Colombia. He holds an LLM in aerospace law from Leiden University, and also he had studies in administrative law from the Pontificia Universidad Javeriana in Bogota. He's a well-recognized expert in our local national in aviation industry, and also reference in the international board of the academics around aviation law. So without any more further to say, Professor George Leludas, please be welcome to this event. We're not hearing you, Professor, maybe.
Yes, sorry. Buenos dias, everyone, and thank you, Diego and Professor Diaz-Granados, for the introductions. It's certainly a pleasure to join. I wish I could literally be there, physically be in Colombia, but that would do. And first of all, I would like to thank the association for inviting me. And certainly I would like to thank Diego for raising the topic of aviation insurance. We had a brilliant 3-day event in Amsterdam where we met. And although Liverpool lost at that day, I remember we had a few drinks at the bar, still it was a memorable, very memorable day. And also I would like to thank Jose Ignacio. I think I have shared my screen with you, my slides. I don't know if you can see them.
Yes, we can see them, Professor.
Yes, thank you. And also I would like to thank Jose Ignacio, because I think Colombia, you are lucky because you have one of the best aviation lawyers of our generation at the moment. And I think his reputation exceeds the borders of Colombia. And if you ask around, I think the aviation community, everyone will have only good words to say about him, both in terms of his professional abilities, but also about his personal characteristics. So I'm really pleased to be with you. And yes, we'll be discussing aviation insurance today. I just finished a class of marine insurance, teaching marine insurance before joining in. So I have a few things fresh, and I can offer a bit of a comparison with aviation and shipping insurance, and what are the differences in terms of law and in terms of practice. Now, we are going to cover 5 topics. We're going to start a little bit with the history of aviation insurance. Then we're going to move a bit into what kind of types of aviation insurance you come across in the London market, and also what are the current market conditions of aviation insurance. I know a lot of you, or there's an assumption that since less aircraft are flying, that the aviation the premium rates will lower, but it seems the opposite, that the premium rates in the coming renewals in December 2020 will increase. And part of my presentation will be to explain to you why the premium rates are going to increase, although there is less risk on the air. Then in the third part, Jose Ignacio will give you a presentation on the hull and liability airline insurance and what are the standard forms and what are the standard exclusions and conditions applicable to the hull and liability part of the airline industry, which is probably the biggest sector of aviation insurance. And then in part 4, we're going to look a bit into compulsory insurance requirement. I will take you through the European legislation on compulsory insurance requirement. And then Jose Ignacio is going to take you through the Colombian minimum insurance requirements. And then at the end, I'm going to make a presentation on aircraft finance insurance and what kind of insurance issues, both in terms of policies and in terms of law, aircraft lessors and banks that finance the purchase of aircraft want to see in an airline's hull and liability policy. I'm not sure what the rules are I suppose we're going to take questions at the end, but I suspect for my part, if you have a burning desire to ask a question and if you don't want to wait until the end, I'm happy to respond to any questions on the spot. One final point before I start the presentation, I would like to apologize in advance to the interpreter. I tend to speak quickly. I will try to slow myself down. I will do my best, but if I am speaking too fast, please let me know and I will try to slow down further.
Dear Professor,
now, yes.
Just a second. Is it possible to modify the presentation or the slideshow? Since, I mean, we're watching the moderator view.
Okay, do you want to do it like that?
Well, it's better or as a big presentation like the slideshow, but the other way around. I mean, so you can see the moderator view and with the big screen.
Okay. How do I do that? Let me see.
I think you can just...
George, maybe you have two screens, I guess.
I have two screens, yes, yeah.
Yes, that's why. Then you just need to start your slideshow, and then...
Is it better now?
No, and then you need to go... Yeah, just share it again.
Yep, there I do. Is it better now?
Begin your slideshow.
Yep.
Yeah, there you go.
There you go.
There you go. All right, guys. Yes, it's the first time I'm using two screens for a presentation because I'm doing it from the office. So apologies for that. So let's start. Now, aviation insurance does not have the same long history as shipping, which goes back in the 18th century with Lloyd's of London and the coffee shop of Edward Lloyd's, but it has quite a bit of a history now. Now, there was an aviation market in London before the First World War, and it's debatable whether the first ever airline insurance policy, aircraft insurance policy, was written in 1908 or in 1911 or in 1912. But everyone agrees that it was written at some point between 1908 and 1911. And it was a policy to cover fire risks and also the risk of third-party liability for one particular aircraft. Now, the London market did not follow up on aviation insurance until after the First World War. They did not follow up with aviation insurance because there were major losses as a result of an air show in England somewhere between 1912 and 1913. And aviation and insurers at the time, they felt it's too much of a risk for us. Now, consider it in the context of today's space tourism and space travel. And for the 1920s and the 1910s, it was a similar fear that it's a brand new risk, the technology is untested, and as insurers, we want the technology to improve before we decide to invest into insurance products. It's very similarly to what we have today with space tourism, and you can still find insurance for certain spacecraft, but whether you can find insurance for flying people to space, for launching people into space, it's a whole different scenario. Now, what changed after the First World War? I think after the First World War, the war experience taught us a lot of lessons about aeronautics, and technology was gradually improving. Also, from the point of view of London insurers, we had at the time the Warsaw Convention of 1929. And for those who don't practice aviation law, the Warsaw Convention limited the liability of airlines in cases of accidents and in cases of claims by passengers and cargo owners. And for the first time, insurers felt that, look, the technology is still untested. We still get significant number of accidents, but at least we know that with commercial operations, at least, even if there are claims, the claims will be limited. And this way, they started to calculate worst case scenario and also to calculate with some confidence the level of premium rates. Now, having said that, they were still troubled. And one of the troubles they had was that passengers at the time were very rich. They were even, I think, if you compare, they were even richer than whoever can afford now to pay $100,000 to fly to space. And that, to an extent, was a major concern for them, even with the limits of liability of the Warsaw Convention, because there was a way to break the limits of liability of the Warsaw Convention and to seek more money than what the convention provides. So what they did not invest directly as insurers or Lloyd's syndicates. What they did, they created pools. So they came together, 2, 3, 4 of them together, and they set up separate companies through which they were selling aviation insurance. One famous one is the White Cross Aviation Insurance in 1930s, which was the first pool in aviation in the London market. And essentially, they were trying to limit their exposure to the aviation risk by creating a separate company and limiting essentially the level of investment via this company. Now, what we now call the London market was certainly created after the Second World War. Again, the war experience improved the level of aeronautics, the expertise on safety issues, but also you had a lot of spare aircraft coming out of, especially in the US, that were used as bombers during the war, but now they were converted to passenger aircraft. And the market enabled the London insurers not only to invest directly into aviation insurance. There were now Lloyd's syndicates that were deciding to sell aviation insurance. There were insurance companies that were deciding to sell aviation insurance, not via pools, but in their own name and in their own capacity. Of course, you had subscription placement where one airline policy would have 20, 30, or 40 insurers, but still they were confident enough in terms of accident rates and premiums to invest directly. Compared to that with the US, where the US, even after the Second World War, they stuck, and I'm not using in a negative way, they followed the pool trend. And if you look today, the biggest aviation insurance in the US at the moment, USAIG, is a pool, and its existence goes back to the days before the Second World War. But the London market has moved on significantly from the pool structure and have decided after the Second World War to invest directly into aviation insurance. Now, 50s was what we think the starting point. And 50s brought the 707 and the test flight of 707 that was insured, I think, for $5 million, both from Lloyd's syndicates and aviation and Lloyd's and non-Lloyd's companies, was the starting point of the aviation insurance market. And after the test flight went well, the insurance market felt confident that, yes, this is a line of business that we can invest and we can make money out of it. Of course, as the years went along, you had a lot of new risks in the aviation market. One of the major ones that you had to deal with was the product liability, especially with companies like Boeing, like Airbus, but also engine manufacturers. And you still had several accidents being caused by product liability defects, whether it's an engine, whether it was a component part, whether it was the fuselage, and so on. I mean, at the beginning, there were not so much indemnities given by airlines to aircraft and engine manufacturers. It was the other way around. Essentially, product manufacturers were essentially indemnifying the airlines for any loss their products caused. Now, from the 60s onward, though, with the product liability claims increasing, this trend changed. And since then, we use the airline as the risk allocation party. And most of the contracts you're going to see, whether it's a manufacturing contract or a leasing contract or an engine manufacturing contract, they will put the risk, most of the risk, onto the airline. And the philosophical argument behind that is that by allocating the risk to you, we manage to reduce our rates as product manufacturers, component manufacturers, or lessors. Of course, it's a questionable argument, but this is how the industry has evolved since the 1960s. The other major risk was new aircraft. Wide-bodied aircraft, 747s, and how do you insure them? A340s, how do you insure them? The hull prices, the hull value increased significantly since the 1950s. And then, of course, after the 1960s, you had war risks. Up until the 1960s, nobody cared about war. War was part of the one policy that an airline would buy. You had one policy to cover your hull, to cover your liability, and part of your cover would be hull war and liability war. Nobody thought that war risks are so important for aviation. But then you had several hijackings in the 60s and 70s in different parts of the world, Middle East, Europe, Latin America, the relationship between Cuba and the US, where insurers, and the London insurers were the first ones to do that. They decided that we can't afford to have the same policy for both risks. And since then, they decided to split the policies. And especially in terms of hull war risks, the trend remains until today that war risks are excluded from your main policy as an airline, and then you have to buy a separate hull war policy to protect against any damage to your aircraft as a result of hijacking, acts of sabotage, and so on. For passenger and liability risks, we're going to see that now the market has an endorsement, and Jose Ignacio will explain, has an endorsement that covers your war liability risk as part of your main policy. But we're going to see that 9/11 caused significant problems to that. Now, as we move along and we go from the 50s to the 80s and the 90s were two relatively horrible decades for aviation insurance. The 1980s was aviation related. The problems were aviation related. 1980s, especially 1991 to 1985, so significant accidents worldwide, significant accidents with a high valued aircraft, total losses where all the passengers perished and you had claims. And historically, I think 1985 is considered to be the worst year in terms of losses in the aviation, in the London aviation insurance market. Rates increased significantly. There were situations reported where you had an increase of more than 60% of the premium rates that airlines had to pay as a result of the losses. And as a result of that, IATA in 1986 set up a captive insurance company to help airlines dealing with this high level of premium. So essentially, IATA offered some insurance, and airlines could buy some of their insurance needs via this captive insurance company. Now, this company only lasted for 7 years. I think they set up office in 1986, and they ceased trading in 1993. The reason for that was that 1986 to 1990 was probably one of the best years of aviation in terms of rates. So we had very few claims. The claims were relatively minor, and in aviation insurance in London made up not only the losses they suffered between 1985 and 1980s and 1985, but they also made a profit. And the rates dropped significantly, and there was no need for the IATA captive insurance company. Now, what made life more difficult in the 1990s is not aviation related, it's Lloyd's related. I mean, those of you who study insurance law, no matter what kind of insurance law you study, you know that the 1990s Lloyd's had the famous issues with asbestos, the reinsurance of asbestos claims, plus several natural disaster claims, pollution and so on. There was the issue of not having enough reinsurance. A number of names of Lloyd's went bankrupt. And Lloyd's were struggling for their survival. They managed to survive. They set up a separate company to move the bad debt they had. But certainly the commotion that Lloyd's went through in the 1990s certainly affected aviation premium rates. And although it wasn't a problem created by aviation, it certainly affected those insurance operating in the Lloyd's market that were offering aviation risks, those syndicates that were offering aviation risks. And then the last significant event, I think, in terms of aviation insurance is 9/11. And 9/11, as I say on the slide, brought a sea change to the airline insurance markets. It changed the way insurers offer third-party liability risks. The aviation policies, airline policies in terms of third-party war risks were cancelled 7 days after 9/11, and cover was reinstated after 7 days with very, very low limits. And because the limits of insurance offered by the insurance market in the aftermath of 9/11 was so low that governments stepped in, and they offered for several years. The US even up until a couple of years ago offered third-party war risk insurance to their airlines with better rates. Gradually, the market recovered, and by now, no government offers third-party war risk liability insurance, and everyone buys the cover from the market, from the commercial market. But 9/11 left us with two legacies. The first one was, to what extent, what are the financial limits of insurers providing third-party war risk insurance? I'm going to discuss about that shortly. And the second one opened the discussion about weapons of mass destruction. And now, after 9/11, the worst case scenario of an insurer, of an aviation insurer, is not anymore a collision of two 747s or two A380s above a major city like New York, and the claims from these passengers of these two aircraft and the destruction that you cause on the ground. Or the worst case scenario is not 9/11 the way we experienced it, but the worst case scenario is, what if there is a 9/11 nowadays with weapons of mass destruction? And aviation insurers identify three weapons of mass destruction: biochemical ones, radioactive contamination, and electromagnetic pulse. And what they fear is that the loss potential of those weapons, if used by terrorists, and if they are used by terrorists in an aircraft, can have quadruple impact than the 9/11 had. So one of the aspects of weapons of mass destruction deals with hull, and we're going to see that there is a product in the market, LSW 555D, a policy that excludes to a certain extent weapons of mass destruction for cover, for hull risks. But at the same time, there is regulators do not feel so comfortable having similar exclusions for weapons of mass destruction when it comes to passenger and third-party liabilities claim. So for the time being, the same exclusions that insurers use for weapons of mass destruction in hull, they cannot be used vis-a-vis passenger claims and third-party claims. And the reason behind that is that regulators are concerned that if another 9/11 happens with weapons of mass destruction, by using this kind of exclusions, many claims will remain unsatisfied, because the insurers will have a valid reason to avoid cover. So in that respect, they have not necessarily approved this type of policies. Now, what are the three current, let's say, issues that aviation insurers face? Apart from weapons of mass destruction, they have two additional ones. The first one is attritional losses. Attritional losses, I use the term to refer to partial losses. And partial losses were never a significant problem for insurers, but now they are becoming, and they are becoming because the cost of repairing aircraft is more and more expensive. If you look at 787, it uses exotic materials, expensive materials. To repair a wing, for example, is way more expensive than it was to recover the wing of an old 747. Same with A380s. Again, A380s, for example, was not necessarily a good aircraft for insurers because it had a lot of small problems, a lot of they were called in to cover a lot of partial losses caused as a result of the operation of A380s. And because it was a new aircraft using exotic materials, they were expensive claims. The second major issue that they currently face is deductibles. Now, deductibles in aviation insurance are, I think, for wide-bodied aircraft is between 1 million and 1.5 million per aircraft. And for narrow-bodied is between 500,000 and 750 500,000 and 750,000 US dollars. Insurers believe that these are very low, especially for wide-bodied aircraft, to have a deductible of 1 million. And ideally, they want to increase the deductible. They want to increase the amount of risk that the airline retains. The problem is that they can't do it the same way they did it in the 1980s. The current level of deductibles is the result of an agreement that insurers had back in the 1980s, where essentially they coordinated to set the limits globally. The problem that you have now is you can't do that anymore. Competition laws will catch you, and that will be an uncompetitive practice if you decide to sit all together and agree on what kind of deductibles now we need to impose on our on airlines. Also, and the problem that they face is that if unilaterally some of them decide to increase the deductibles, then they are in a competitive disadvantage against their competitors. So if XYZ Insurance decides to move the deductible to 3 million, its competitors can retain it in 1.5 and use it as a selling point to airlines and say, look, we are offering a much lower deductible. So in that respect, they retain the existing limits, not because they are happy with them, but because they cannot do otherwise. Now, and I mean, as I said, questions at the end, but if you have any burning desire to ask any questions about the history of aviation insurance, I'm happy to respond it now. Now, from history, we're going to move a little bit to the types and conditions of the aviation insurance market. Now, what we call aviation insurance market has three segments. The first one is the airlines, aircraft operators, hull passengers, and third-party liability insurers. Most of the insurers that invest in aviation insurance, this is the market they focus. This is where they invest. This is where they make the money from. To give essentially hull and liability covers and spare parts cover to airlines, to aircraft operators, to general aviation users, to anyone from who flies a very small Cessna to flying an A380. A second segment and second part of the market is manufacturers and suppliers products liability. This is a very specialized market. It's essentially a products liability market being offered to aircraft and engine manufacturers. Some insurers, especially some major ones that do offer airline insurance, they also specialize in manufacturers' products liability. But the vast majority of what we call aviation insurers, they do not touch the manufacturers market because we don't have that many claims as you have in the airlines insurance market. But if you have claims, by definition, they are quite expensive ones. And don't feel that they want to invest in a market that doesn't have enough profit margins. Now, the third layer, the third segment, is the airport's owners and operators liability. This is very much property insurance. A number of property insurers, not necessarily specializing in aviation, do offer cover for airports, to airports, to their premises. Where it is a very specialized market is when it comes to insuring the liability of air traffic controllers and the operation of the traffic controllers. And in that part, there is a very niche, very small market that offers air traffic controllers liability insurance. But again, it's a very small market compared to the airlines operators insurance. And certainly, the premium rates are quite expensive for what they offer. So this is why we don't going to touch today in the manufacturers or the airport's owners liability. We're going to focus on the main one, the one that touches most buyers and the one that creates most of the case law and cases around the world, the airlines, hull and passenger liability market. Now, I keep saying about London market and London market. What is this London aviation market? It's not so much different from the London insurance market in general. You have Lloyd's syndicates that specialize in aviation insurance, and even if they don't specialize in aviation insurance, they offer aviation insurance cover. You have insurance companies outside of the Lloyd's market that do offer aviation insurance products. I'm only naming a few of them, not because I think they are, because I'm mentioning it for commercial reasons, just to put a name behind a slide, like AXA, like Allianz. They are offering extensive aviation products. And then you have still insurance pools. And the two main insurance pools you have in the main insurance pool you have in the London market is Global Aerospace, which I think in terms of figures, Global Aerospace is the biggest insurer, aviation insurer, covers both product liability issues, covers airlines and so on. But it's a pool. It's not an insurance company per se. And if you look into the Global Aerospace website, you're going to see that it consists of, I think, of 4 individual companies: Munich Re, MAPFRE, National Indemnity Insurance, Tokyo Marine, and Mitsui Sumitomo. 5 of them that they have invested, they have created a separate entity, Global Aerospace, and they are selling aviation insurance as Global Aerospace, and each one of them has certain levels of investments. It's all publicly available. You can Google Global Aerospace and you can find which 5 companies are part of it and to what extent they have invested via them. So, for example, you saw that the main investor, almost 50%, is Munich Re, which is a reinsurance company, but this is one of the ways that Munich Re provides primary aviation insurance, not necessarily under its name as a reinsurer, but via Global Aerospace. Very similar approach is followed in the US with USAIG, which is the biggest American aviation insurance. Again, it's a pool, goes back to the First World War. And if you can, again, if you Google USAIG, you're going to find there are 2 companies at the moment that are parts of USAIG. And they are selling aviation product via this pool, not in their own capacity. The other unique player in the aviation insurance market is Delvag. Delvag is a captive insurer, and it started as the captive insurer of Lufthansa, again, after the First World War. But at the moment, Delvag, it's a full-blown captive insurance, and some even say that it's a full-blown insurance company, in the sense that it doesn't only sell insurance to Lufthansa, but it sells insurance to a number of other airlines that are part of the Lufthansa group, and also sells insurance to cargo owners that want to transport cargo with Lufthansa and so on, or other cargo owners that want to insure their cargo during transit. And Delvag has certainly captured a big market in the continental European aviation insurance scheme. And as I said, it operates as a full-blown insurance company. Now, Lufthansa uses Delvag, for example, sometimes when the market is expensive, uses Delvag as a way of dropping the premium rates. So buys some cover from Delvag and some from the London market. And when the market is very cheap, the commercial market is cheap, then again, they balance their investment. Some insurance will be bought via Delvag and some will be bought via the London insurance market. So it's a way for them to keep the premium rates in very logical levels. Now, I mentioned about premium, and this is one of the problems of the London insurance market. It's a small market, and here I have given you an example, and I want you to think about it in your spare time. Now, if you are a car insurer, even in a country like Colombia, your insurance pool is huge. There are millions of cars in Colombia in any given jurisdiction. Now, if you look into airlines and aircraft, I mean, you compare how many aircraft you have in Colombia, both general aviation and commercial airlines. The number is significantly less. And even if you look in bigger countries in terms of aviation, like the UK, you have the numbers of cars you have is significantly more than the numbers of aircraft you have. Now, you might say, yeah, but what's the comparison there? The comparison there is that when it comes to the pool, the potential clients insurers would have, aviation insurance, airline insurers have a very small market. And that means that they have a very small number of clients, and also they have clients that operate risky commodities. Operating an aircraft is way more risky than operating a car. So that means that when a loss happens and there is a total loss of an aircraft, of an airline that flies globally, that has an immediate impact on the premium rates of all airlines worldwide. And I've given you an example of the slide. In December 2009, premium rates on average in the London market increased by 24%. The main reason, not the only one, but the main reason behind this increase was the Air France disaster of Flight 447 that was lost in the South Atlantic. It was a total loss of a 747, and that loss itself pushed the market globally to increase the premiums by 24%. 24% increase within a year is a very significant, a very steep increase if you think about it. And the main reason is that one loss like that affects the entire market, and the entire market is concerned that what happens now? Our our actuarial models didn't predict that, so we need to make provision for that. Now, to see how small the aviation market is, I've given you this year's statistics. Aviation insurance in 2018 contributed 4 billion of premium to the London market. And the London market has 56% of the global aviation insurance market. More than half of the global aviation market comes in London to be insured. And they produce 4 billion of premium. Compare that with the marine insurance market. The marine insurance market in 2018 contributed 26 billion of premium to the London insurance market, and they have only 33% of the global market share. Aviation is flashy, aircraft are flashy, they are good to look at, they are expensive equipment, but from an aviation insurance point of view, they are not a good risk. They are a risk that it's difficult, even today, even with all the historical data that we have, it remains a risky line of insurance business. Not as risky as it was in the 50s, 60s, 70s, but still is way riskier than other modes of transport. If you offer car insurance, if you have marine insurance, if you offer energy insurance, and that reflected on the rates. Now, one final thing before I open the floor to Jose Ignacio. Between 2010 and 2016, it was one of the biggest historical paradox of the London insurance market. Between 2010 and 2016, the industry suffered very significant losses, and I have highlighted on the slides 3 of the most important ones. We have the Malaysian Airlines Flight 370, the one that went missing, and we still haven't found it. They had the Malaysian Airlines Flight 17 in 2015, the one that was brought down in Ukraine, over Ukraine. And you had also the German Wings Flight 9525, the one that the pilots committed suicide on a flight between Spain and Germany. Now, where is the paradox? That although we had very significant losses, the premiums kept dropping. And the period between 2010 and 2016 is probably historically is the cheapest ever aviation insurance period in terms of premium rates. It was very cheap compared to compared to years before to buy aviation insurance from the London market. And one question that came up and from someone that studies aviation insurance is, why on earth premiums did not increase when you had such significant losses? If you look back in 2009, one significant loss pushed the market to have a 24% increase in the premium. The answer to that is twofold. The first one is market competition. The market competition in what respect? Between 2010, after 2010, several investments were made into aviation insurance, especially in the Asian markets, either by setting up new Lloyd syndicates, new players in the aviation insurance market, or existing insurers or syndicates deciding to invest into aviation insurance. So existing insurers and bigger players in the aviation insurance market, they had a choice to make. They could increase the premium on the basis of the accident rates, but then they risked that they would lose clients, and they would lose clients because the new players in the market were unaffected by historical losses. So they were new, they were offering better rates, and they could attract several airlines. Now, to avoid the situation, they decided to prioritize the retaining of market share. So intentionally, they decided to keep the premium rates low so that they don't lose their clients, and they achieve to either push out or reduce the involvement of new investors into the aviation insurance market. So it was a bit of a fake situation happening between 2010 and 2016. The premium rates did not actually correspond to the accident rates. Why The second reason is that especially the Malaysian flight losses was felt by the same set of insurers. Both involved Malaysian Airlines, the same airline. It was felt extensively by the market, but again, being in the same of the same airline, it was felt by the same set of insurers. And also a big part of those risks was covered by war risk insurers, especially in the hull. Also, the German Whigs accident, in terms of hull cover, it was covered by hull war insurance, because suicide in aviation is a war risk, not a safety risk. So the losses, although they were significant, part of it went into the war insurance market, which to an extent is more prepared to deal with these kind of events. War risk insurers and the war risk insurers in the hull market are not specializing in aviation. The hull war risk insurers provide hull war for aircraft, hull war for vessels, for ships. So they have a much bigger portfolio. They have a much bigger investment in the insurance industry, and they know that they are not being called to cover losses on a regular basis, but when they are called to cover losses, usually they are significant losses, and they are better prepared than non-war risk insurers. What changed after 2016? And the market and the rates are going up. Losses of insurers. What changed after 2016 is that insurers, not aviation insurers, but especially the property departments that usually are the most profitable departments of insurers, sustain significant losses. And if you look back and if you ask me which were these significant losses, hurricane and other natural disaster losses that they experienced in the US the last few years. This has cost them significant amount of money, and they decided that we cannot anymore subsidize aviation insurance, and we cannot subsidize our aviation insurance operations, because our most profitable ones, the ones that were subsidizing aviation insurance, property ones, are now losing money, and we have to cut down on costs. And since 2016, you hear always the news, Lloyd's syndicates decide to stop insuring aviation insurance departments. Aviation departments of insurers are being sold to other parties, and there is a consolidation of the market. And now aviation insurers, or insurers in general, that have provide aviation cover, have decided that we cannot anymore prioritize market share. We have to prioritize profits. And aviation insurance, due to their characteristics, is not anymore a profitable market, and we want to, at the moment, de-invest from aviation insurance. And that brings us to COVID. And I saw there is a question about COVID, and I think the assumption is that, yes, with COVID, having aircraft on the ground, that means a reduction of the premium rates. But the information we get from brokers at the moment, and most of the worldwide fleet is being renewed now as we speak, November and December, in the London market, is that premium rates will increase. And will increase because this cost-cutting exercise of insurers has not stopped. They still have losses from other segments. Business interruption now insurance is a major concern. So they're not willing to offer better rates in terms of aviation insurance. But also, don't forget that, yes, we don't have aircraft on the ground or flying, but we also have aircraft on the ground. And if you think about it, it's still a significant risk. And the significant risk that you have hundreds of aircraft parked somewhere in an airport, and not necessarily one of the most secure airports around the world. What if someone breaches security and destroys aircraft and blows up aircraft? Again, and you have aggregation of losses, aggregation of hull losses. Certainly, the combination of these two factors from the point of view of aviation insurance does not justify a deduction of the premium. Now, on a case-by-case basis, as a result of COVID, insurers have made reductions, and they have given allowances and flexibility with respect to the payment of premium, and they are very understanding of what the whole COVID situation has caused to the airline. So in that respect, case by case, they do provide, most of them, at least from what brokers report, they do provide allowances and make provision for premiums and so on. But as a market, when it comes to the renewal and what kind of premiums they're going to charge for the next policy year, it's not expected to lower down. And especially if you hear now the news with with the vaccine, and if it's successful, one of the things that insurers take into consideration is, yes, at the moment that we renew the policies, COVID is an issue and airlines have parked aircraft. But if the news are as we speak and we have some solution in the COVID situation as a result of the vaccine, airlines will be up and flying in the summer. And then by then we won't be able to increase the premium. So we need to make provision now for the expansion of operations that it is expected to happen in the summer, or at least to make provision in case operations come back to the normal levels in the summer or afterwards. On that note, I'm leaving you for the time being in the capable hands of Jose Ignacio. Thank you very much, and I will return, like Robocop said. Thank you.
George, thank you very much, and thank you very much to Acoldese again for this initiative, and Acoldese Joven for this initiative, which I certainly hope is not the first event that takes place on an international basis and in English, and with such distinguished professors and practitioners like George. George is perhaps the most well-known, and I will just delete the perhaps, is the most well-known instructor and professor and practitioner on this topic. He is an international instructor on these topics, and it is a true honor for me to be sharing the floor with him this time, especially with a person from whom I have learned a lot. I know George since over a decade already, very much a decade. So I've been learning from him since then. So it is really fantastic to be here with him. And I'll share some minutes and with all of you guys attending this lecture. So right after this fantastic background and market background and historical background that George has given us with a lot of very insightful information, I will, in the following minutes, be addressing the basics of hull and liability airline insurance, as George was able to introduce it. We'll be focusing on the airline operators, on the operators' aviation insurance rather than on different types of aviation insurance. And therefore, we'll also focus on hull and liability. Hull is property insurance, as you know it, whereas aviation liability is a specific type of liability that is offered especially to airlines and some other participants or stakeholders in this industry. George, if you could please move to the next slide. Thank you very much. So let's speak about hull insurance. So the first thing we need to explain here is that hull insurance is typically, the policy wording is typically contained in a predetermined wording that is very widely used in the London market, which is the AVN1C. Now it's being moved to the A1D policy wording. And it is, as I said, a predetermined policy wording is very much used and widely used for general aviation and smaller operators, whereas the larger operators, such as big airlines, they typically adopt a tailor-made coverage, but anyway, very much following what the AVN1C and D policy wording states. So in essence, hull insurance, first of all, covers damages arising out of accidental losses to the aircraft, and then the following question will emerge is what is an aircraft for the purposes of the hull coverage. That sometimes can be a little bit difficult to assess, especially when you have to deal with engines. Engines on an aircraft like a Boeing 787, like the one that George was referring to as a very sophisticated and brand new aircraft, and therefore very expensive aircraft. An engine typically can be worth $10 million. So a question or an issue related with an engine can be extremely relevant. Therefore, you need to understand as an operator whether or not the engine is included in the aircraft coverage or not. So in essence, under hull insurance, if the engine is attached to the aircraft and therefore forms part of the aircraft. It is insured under the aircraft hull coverage. But of course, if it is removed from the aircraft, from the fuselage, from the hull, then it is automatically out of that coverage, and then a separate product needs to be purchased by the operator to make sure engines are always insured. But for the time being, aircraft is the sum of many parts and components, and when they are together, they form the aircraft, and therefore they are covered under this whole insurance coverage. That loss that is suffered by the aircraft must be accidental. We will come into the exclusions later on, but it is very important to state from this moment on that every loss needs to be accidental. Therefore, whatever is not accidental, whatever is perfectly foreseen, whatever is scheduled, whatever is normal, is not part of the coverage, and actually is not part of any insurance, because the risk is inherently linked to unforeseen events, and that are technically external to the operator. So therefore, whatever is internal, whatever is foreseen, cannot be treated as accidental and will not be covered. Let's move to the next slide. So what happens if there is a loss? And let's not classify that loss yet as a total or partial loss. But as a general rule, under the AVN1C or AVN1D policy wording, and under the typical tailor-made policy wordings for larger operators, the insurers will have at their option three alternatives. First, they can pay for the aircraft up to the insured amount, of course. Two, they can replace the aircraft. Or three, they can repair the aircraft also up to the insured amount. So that's the general rule. So if the insurer, if insurers actually take the option of repairing the aircraft, they shall only cover whatever is accidental. Therefore, all those scheduled maintenance or all those expenses that would have been made by the operator anyway, because they were part of their cost structure, like overhauls, they will not be covered by insurers, and therefore insurers will only limit themselves, they only limit their participation to all those damages that are directly related with the accidental loss. This is very important because this is also part of the essence of insurance, once again, whereby whereby the risk is inherent to accidental events, not to foreseen or foreseeable events. Deductible, it will very much depend on the aircraft type, as George was also able to introduce it. But the large commercial aircraft, narrow body aircraft, and narrow body, when we talk about narrow body aircraft, that means a single aisle aircraft. They will typically have a deductible between 750,000 or $1 million US, whereas a wide body will be between $1 million US and $1.5 million US. So it is a very high deductible from the operator's side. As George was also mentioning, it can be very low from the insurer's side. But it is very important to know that a typical loss on a daily basis, let's not talk about a huge loss and a massive loss, but let's just talk about a smaller loss, like a collision, not mid-air collision, but a collision amongst aircraft on the ground. That collision can be very easily exceeding the $2 or $3 million. So when you have a collision on around $2 million US or $3 million US, and the operator needs to pay $1 million US out of that collision, that is a lot of money that needs to be spent by the operator. And as if you guys that are attending the lecture are a little bit connected with the airline industry, you may know that the airlines, I mean, all operators, but especially airlines, they are very sensitive in regards with their cash flow, and just being forced to pay $1 million suddenly, then that may create a huge impact on their cash flow, and this is something they would like to avoid. So deductible will always be an issue, depending on which side are you talking about. So if it is from the operator's side, deductible will always be very high. But if you're on the insurer's side, then it will be very low for the huge risk that the insurers are actually facing. If the aircraft is financed, then the previously mentioned general rule will be different, because there will be an endorsement to the general coverage, I mean to the general whole insurance coverage, and therefore insurers will be bound by an agreed value clause, which means the replacement option, the replacement alternative that insurers typically have, will be deleted, and therefore insurers will only have two alternatives or two alternative obligations. First, they will repair the aircraft up to the insured amount, which is agreed, and they will pay for the aircraft in the event there is a total loss. And the reason why this occurs, and the reason why the AVN 61, apologies, agreed value clause is usually included in aviation insurance, is because aircraft are financed as an asset-based financing. That means that the aircraft, which is the asset, is the guarantee of the entire financing structure. And therefore, financiers want to protect their asset, which is in turn their guarantee, as much as possible. And they just don't want an aircraft. I mean, they don't want their guarantee to be replaced by whatever aircraft is eventually available. So they just want to make sure that if there is a total loss, they will be paid, or if the aircraft suffers a partial loss, it will be repaired, but it will be that same aircraft, the one that they agreed to finance. AVN 61 policy endorsement, the agreed value clause, is also connected with the AVN 67B or C, which is the airline finance clause. George will be referring to this in more detail later on in this lecture. But once AVN 67B or AVN 67C clauses are part of that insurance contract, payments in the event of a total loss will be made directly to financiers. They will not be made directly to the policyholder, who is usually the airline or the operator. And therefore, those financiers are included as beneficiaries of that insurance coverage, I mean, of the whole insurance coverage. And payments will be technically, in most cases, will be technically made to a security trustee, which is an entity, a bank, a trust, or whomever is determined by the financial structure of the aircraft, that will be receiving the funds and then dividing and splitting all available monies to every single party participating in that financial structure. So in short, if the aircraft is financed, then specific provisions will be often found in whole insurance coverage, and those specific provisions will determine whether or not the insurers will be entitled to replace the aircraft or not as an alternative, and B, they will determine those provisions. They will determine who will be the payee in the event there is a total loss, and in short, the payee will be typically a security trustee or an entity determined directly by financiers, who will not in any case be the airline or the aircraft operator. Next slide, George, please. So let's have an overview on the typical exclusions that are included in the whole insurance, or are part of this whole insurance coverage. First, the wear and tear exclusion is of the essence. I mean, it will actually not need to be mentioned, just to make sure there are no issues. It is always included with the wear and tear. Why? Because wear and tear is foreseeable. This is not something accidental. So if any components of the aircraft are damaged just by using it, so that they suffer wear and tear, this is not accidental, and therefore it is not part of the insurance. And this is why there's a specific exclusion for this. And very well connected to the wear and tear, there is a progressive or cumulative effect exclusion. This is also very much linked to the nature of insurance. Once again, that means that risks are covered and risks are accidental. Therefore, just setting aside anything that is foreseeable. And very important, as it was mentioned by George, and it is typically in insurance, in insurance policies, it is typically found twice in terms of reinstating that war risks are not covered by general aviation insurers. So therefore, the operator needs to buy separate coverage for all those those risks associated to war, and there is a comprehensive list of war-associated risks. But just as an example, what it means war risks is war, invasion, hostilities, rebellion, revolution, insurrection, strikes, confiscation, labor disputes, and so on. All those events are typically war risks, and therefore they are excluded from coverage under the general whole insurance coverage. This is why, so the wording, the AVN1C and D wording typically incorporates this exclusion, but in any case, the AVN48C or AVN48D exclusion clause is also part of the policy, and therefore insurers make sure that war risks are excluded from their side, and that therefore the operator will be entitled to obtain specific coverage from specialized insurers, as George was very easily able to explain it. And this product will be typically contained in the LSW 555D policy wording, which is the specific and special coverage for whole war risks. And we just had two examples, two very realistic examples on how and when war insurers will be covering a loss. And one of them was the Malaysian Airlines MH17 that was destroyed by an arm. We still don't know who was the country that participated in behind shooting the aircraft, but anyway, it was a war-related risk. And the German Wings one, that where the pilot committed suicide, was also a typical war risk event. And in these cases, whole war risks insurers will be covering and paying 100% of the whole loss. So in essence, this is the whole coverage. Let's move on to the airline liability insurance. Airline liability insurance in general terms is related with three main groups of risks. First, third parties. And when we speak about, or when we speak in regards with third parties, we are referring to those parties other than passengers, employees, and crew members. The second group will be passengers, very relevant, and passengers coverage includes baggage. And in the third place, it is also very relevant for airlines to obtain coverage for cargo. And so we'll be addressing, once again, in very general terms, these three types of airline liability insurance. So let's move on to the next slide, please. So in regards with third parties, the typical risks that are insured are damages to third parties on the surface. That means whatever happens to any person on the ground or to any property on the ground that is damaged or that suffers injuries or that is eventually that suffers death as a result of an event caused by an aircraft. And as there is normally a strict liability regime that is applicable to the aircraft operator as a result of anything that happens on the surface. So the aviation liability insurance very much follows that same legal liability regime structure and offers coverage to, for the operator to be protected against claims or events arising out of damages to third parties on the surface. And equally, that third parties coverage offers coverage to events or in regards with events connected with mid-air collisions. And as I was able to briefly mention it, therefore, accidental bodily injury suffered by persons on the ground or on other aircraft will be covered under this insurance. Damages to property, they will also be covered as long as those damages were caused by the aircraft or by any person or object falling from the aircraft. So this is quite relevant. However, the advantage is that the typical coverage that is offered under the aviation insurance is quite broad, because it will not, of course, refer to a specific liability regime. It will be simply referring to those events where by the applicable liability regime, the operator will be liable. But the liability regime in regards with damages to third parties on the surface and mid-air collisions will typically depend on each jurisdiction. That means there are no international conventions on a massive way regulating this matter. The 1952 Rome Convention, even though addresses this matter, is or was basically, because this is in the past, was not majorly or massively ratified by countries. Only 52, if I'm not wrong, 52 or 57 states ratified that convention, and therefore the minority of states are governed by the regime set forth in the 1952 Rome Convention, which means the majority of states need to adopt a special liability regime in regards with damages to third parties on the surface. And that means that every state will have their own rules. In the Colombian case, as I will be referring to later on, very briefly, the 1952 Rome Convention structure is at least followed very much. So in Colombia, it will not be, or insurers will not find a highly different risk in terms of legal regime than that is included in the 1952 Rome Convention. But in any case, the liability regime will depend on each jurisdiction. So once again, and in short, third parties insurance coverage will offer coverage for damages to third parties on the surface and for mid-air collisions. So let's move on now to passengers. In regards with passengers, insurance coverage is granted for accidental bodily injury. Is granted as well for loss or damage to baggage and personal items carried carried by the passengers. And this structure, as it was the case with the third parties coverage, is very much aligned with the international regime that will govern the liability regime for airlines, and that is contained in either the 1929 Warsaw Convention system or the 1999 Montreal Convention. And this is why it is quite curious that the insurance coverage usually refers to bodily injury. And the reason why it refers to bodily injury is because the conventions, both the Warsaw system and the 1999 Montreal Convention, they include bodily injury, or they refer to bodily injury as a condition to access or any compensation, or in other words, to trigger any liability on the airline's side, as long as that bodily injury is the result of an accident suffered by the passenger on board the aircraft or during embarking or disembarking. However, attention shall be given and shall be paid to those local regimes where airline liability may go beyond bodily injury, and the Colombian case is one of those examples, because our local rules, they do not need, or they do not rely on a bodily injury to trigger the air carrier's liability, just an injury. And therefore, our advice will always be, and our comment will always be, that proper insurance coverage needs to be obtained and aligned with that, because technically speaking, if a passenger suffers an injury that is not bodily, then eventually that might fall outside of the coverage, and this needs to be addressed in advance in order to avoid any coverage disputes or issues, even though they tend to be rare in aviation, but nevertheless they can happen. In terms of baggage, it is very likely that given the amount or the number of claims that are filed against airlines in regards with baggage can suffer delay, baggage can suffer damages, baggage can be destroyed, and so on. So this means that airlines and operators are often exposed to a very high number of claims in regards with baggage. Therefore, it is very typical that deductible in regards with baggage will be even above the Montreal 1999 convention limits. That means above $1,600 to $1,700 US, which is very much the limit in SDRs. And what will happen in practice is that insurers will in any case cover defense costs related with a baggage claim, but will not be paying for an eventual compensation that may be ordered in regards with baggage. But anyway, it is included in the coverage. And in the third place, cargo needs a special endorsement. That means that under the general coverage granted by the ABN1C or ABN1D policy wording, or the tailor-made policy wording for general liability, cargo is not included, and therefore a separate endorsement is available to include cargo liability coverage, and that is the ABN92 endorsement, which is also kind of restrictive. It may be eventually possible to obtain some additional coverage, especially for delay or consequential losses claims arising out of cargo, which is typical. I mean, cargo can be delayed, and as cargo is connected to commercial and to business activities, it is typical that some consequential losses claim will be filed or will be received by airlines, and therefore this needs to be addressed. But in any way, or in general terms, under the ABN92 endorsement, the operator will be covering accidental physical loss of the cargo or damages to the cargo, whilst in the care, custody, or control of the insured, as long as that happens during carriage by air. And once again, this is very much aligned to the liability regime set forth in Article 18 of the 1999 Montreal Convention, which in essence determines that the airline is strictly liable for damages arising out of the cargo upon condition that those damages took place during carriage by air. And Montreal defines what carriage by air means, and carriage by air means, in short, that period during which the carrier was in custody of the cargo. It has also a deductible, and cargo claims are sometimes or tend to be low, and just quote marks on that low, but they tend to be low. And in some cases, therefore, the deductible will be above those claims, which means the airline is anyway exposed by insurers will in practice be covering defense expenses and all those amounts that are above the deductible. This, of course, depends on each airline and on how many, and let me just clarify this, because as George was able to explain it, deductible in whole coverage tends to be very much the same everywhere. And this is the result of the 1980s practice, and we still see that today, even though it is not an agreement, because it cannot be, otherwise insurers will face competition issues. But this is not the case in liability, where in liability what usually happens is that there's no deductible for passenger losses or for third parties losses, but there is deductible for baggage and there is deductible for cargo, and it will vary depending on each insured and on each circumstances. Just connecting this with what George was mentioning in regards with the actual placement season, that is November, December, it will be very likely that insurers tend to increase deductibles in regards with cargo and baggage, and therefore airlines will be directly exposed to claims arising out of those losses. So in essence, and apologies once again for this very brief introduction, but we just wanted to give you an introduction. Let's move on very fast to the exclusions, just to finish this liability introduction. Liability exclusions, in essence, first, geographical limits. There are many, but these are the most relevant ones. Geographical limits, very important. Sometimes the policy will also include the LSW 617 endorsement. It is very relevant for smaller operators, and we had a case in Colombia back in 2016 with the Lamia loss. Lamia was an operator transporting the Chapecoense football team, and Lamia, quite unfortunately, the policy had the LSW 617 clause incorporated in the insurance contract, and therefore Colombia was not included in the coverage, or in other words, was excluded from coverage in regards with liability. Large operators, of course, they cannot have their business, they cannot do their business with geographical limits, so they usually have worldwide coverage, but this needs to be agreed. My understanding is that this is usually not a big issue for insurers, especially with large airlines, and it is not an issue to obtain, and it is not very expensive to obtain worldwide coverage, and it is of the essence for large operators. Two, aircraft being used for illegal purposes. It happens more often than anyone would like. And a perfect example of this would be a private aircraft being used for or to carry passengers for hire, that is for commercial purposes, which is basically illegal under aviation regulations. And any damages arising out of that event will be excluded. And in regards with liability, may I also say again that ABN 48C and ABN 48D or ABN 48D policy wordings will be included in the coverage, therefore excluding any risks in regards with liability. Therefore, operators need to buy separate liability coverage that is granted via the ABN 52E endorsement or any of the series of the ABN 52 endorsements, whereby specialized insurers will be granting insurance coverage arising out of war-related risks, such as those that we are giving you examples in the slides. So with this, I will leave the floor to George once again, and I believe also Diego will be asking for a short coffee break.
Yeah, thank you very much, Professor Garcia-Bolea and Professor Lelua, for this part of our event. I will say just two small things before we're going to a 5-minute break. First, I would like to send a special greeting to Dan Sofin, who is a very well-recognized insurance lawyer in London, former partner from Gates and Partners, and former partner from the Kennedy's aviation team in London, who is with us today. Thanks, Dan, for joining us. I would like to ask just a small question from the audience to Professor Leludas. It was raised by our member Alba Lilian Jaramillo, who asked, can you give us an example of massive destruction weapons, and can we just explain which is its direct relation with the aviation insurance?
Yes, thank you. Thank you, Diego. And yes, I'm also glad that Dan is here. Dan, we worked together years ago. We go on with Dan for several years. So we're currently writing something on cargo insurance, air cargo law, just published. So yeah, I'm also glad to virtually see Dan in the audience. Now, there are three weapons of mass destruction for the purposes of aviation insurance: biochemical, hostile use of biochemical material, electromagnetic pulse, and radioactive contamination. A very common example used is with dirty bombs. So essentially what they're afraid of is that if you have a dirty bomb in an airport, planted in an airport, dirty bomb being one that has biochemicals as a way of causing damage. And then if you have a regular bomb, probably people will die in the immediate vicinity of where the bomb is planted. Or if you have put it in an aircraft, probably you would destroy the aircraft, the gate, maybe an aircraft that is waiting next to it. Now, with a dirty bomb, if you plant it and it's of enough power, it has the capacity to destroy the whole airport, to kill everyone inside or to injure everyone inside, and also to destroy the vast majority of aircraft waiting at the gates. So their fear is that if something like that happens, we have an aggregation, an accumulation of losses. And especially liability is one major issue, certainly, but one of the major concerns at the moment is hull. Imagine having 100 aircraft of 30 million value each being destroyed at one go. You immediately have a 300 million loss. So that's why, to an extent, with respect to hull, with LSW 555D, they do exclude, not all of them, not in their entirety, but they exclude a significant part of hull losses caused by weapons of mass destruction. We don't have events yet, but as history has suggested, hull war insurers tend to think ahead in terms of potential situations. I hope that answers the question.
Thank you, George. So,
thank you.
Well, we're going to do a break in this moment. I would like to remember our audience, our speakers are open to answer your questions. We will try to answer the most of them as the time allows us. And finally, in the second part, we'll be talking about compulsory insurance and a brief approach to the aviation and aircraft, the aircraft financiers actually. So, well, see you in 5 minutes.
Thank you.
Well, just a small announcement in Spanish for a second. Para todos los que nos acompañan el día de hoy, les agradecemos estar con nosotros. Les recordamos que tenemos un sistema de interpretación o traducción simultánea en la cual pueden utilizar si están en Zoom en una aplicación para dispositivo móvil o en sus computadores. Si están experimentando problemas técnicos, nos pueden escribir a través de la caja de preguntas o en el correo institucional de Acoldese, @acoldeseaida.org. Well, just for beginning our second part of this event, I'll leave our speakers who will share their ideas around the compulsory insurance.
Thank you, Diego. Again, thank you, Jose Ignacio, for the very detailed presentation on HAL and liability. I'm going to use it as a base of my discussion now. So remember what Jose Ignacio said about HAL and liability insurance. The question that we have to answer now is it compulsory to buy HAL and liability insurance? And if it is compulsory, I mean, the regulators require you, then what are the levels that you need to purchase as an operator, as an aircraft operator? First of all, just to have it a clear answer is that in terms of HAL, there is no compulsory requirement. As far as I'm aware, no regulator, insurance or aviation regulator would like to see evidence that you have HAL insurance. Having said that, though, there is no single lessor in the world, engine or aircraft lessor, that will lease its aircraft to you without you having to buy HAL and liability insurance. And as we are going to see later, they will ask you to add them on your policy. So HAL insurance is not compulsory by law, but it is sort of quasi-compulsory by market practices. Now, when it comes to liability to passengers and third parties, the answer is yes, it is compulsory. International law does provide a very generic and general requirement. So if you look into Montreal Convention 99, the one I have on the slide, which is about passenger risks, Article 50 says essentially that state parties shall require airlines to carry adequate liability insurance covering the liability under this convention. Liability being passenger claims against them for death, bodily injury, baggage claims, and cargo claims. Now, the Rome Convention that Jose Ignacio very rightly said is not a very widely ratified one, does impose a similar requirement that you need contracting states shall impose insurance requirements on operators vis-a-vis the third-party liabilities. The problem with both of these conventions is that they don't identify what kind of insurance they need to buy in detail, and also they don't necessarily identify how much you need to buy, how much insurance you need to comply with the rules. And they leave the determination of limits and the determination of cover to individual states. Now, that's all right if you are a state that have a sophisticated insurance regulation, but that if you look around the world, you might see that some states do not have as sophisticated minimum aviation insurance requirements. Probably the most sophisticated legislation in that sense is the European one. And in Europe, we have a regulation since 2004, Regulation 785 on mandatory insurance requirements for aircraft operators. It has been amended twice. The last time was this year. But the core of the regulation remains the same since 2004. I will briefly go through it. Now, I have given you the website where you can go and find it. I have prepared quite extensive slides on the minimum insurance, not so much to go through today, but also for those of you that want to have a copy of the slides and you want to start doing some research on the European way to solve this issue, you have enough materials. Now, when does this regulation apply? It applies to any flights within Europe, into Europe, out of Europe, or over the territory of Europe. It will cover every single flight, whether you overfly European airspace, whether you fly within Europe from France to Italy, whether you fly into France from, let's say, Colombia, whether you fly out of France to Colombia. Any of that situation, you are covered. and you have to comply with the regulation. It doesn't matter the nationality of the airline. It doesn't matter the nationality of the aircraft. It has a clear geographical scope. Who is responsible to buy the insurance? The regulation says the aircraft operator, meaning the guy that has continual effective disposal of the use of the aircraft. Usually in dry leases, that would be the lessee, and in wet leases, it will be the lessor. Now, what kind of risks do you need to insure? You need to insure, as per the regulation, liabilities for passengers, baggage, cargo, and third parties. And the regulation makes very clear that those risks should include both non-war and war risks. So you need to have cover for terrorism, hijacking, and so on. Now, one differentiation there. If you are insuring passengers, baggage, and cargo and third parties for non-war risks, your insurance should be on a per occurrence basis. So every time you have a loss, the insurers will need to provide you the limits of the policy. With respect to third parties war risk, only third parties war risk, then this insurance could be on an aggregate basis, meaning that the limit you have in your policy for third party war risks, for example, if you have $1 million US dollars for third party war risks, this is a year-long limit. It's not a per occurrence. Not every time that you have a third-party accident, insurers are liable up to 1 million. Essentially, they give you 1 million per year to cover all the claims that you might have under third-party liability cover for the entire year. And if those claims exceed this 1 million, then they have no further responsibility. You need to find further insurers to cover those risks. The other tricky point with the European regulation is that it's the only one that I am aware of that covers cargo and baggage claims. So essentially, it makes cargo and baggage insurance compulsory. I'm not a big fan of that, especially when it comes to cargo insurance, but that's the law in Europe. I haven't seen it, though, anywhere else. Even if you look in sophisticated aviation insurance countries like the US, they are not going to have compulsory insurance for cargo and not compulsory for baggage. But from the European point of view, all these four risks are treated in a similar manner. What are the liabilities? What are the numbers you need to get? For passenger risks, the minimum insurance you need to have is 250,000 SDRs per passenger. So essentially what the European Union wants you to do, if you have an aircraft of 190 seats, the minimum insurance you need to buy for liability risks is multiply 190 seats by 250,000 SDRs, and that will give you the figure. For baggage claims is 1.288 SDRs per passenger. This is the limit of liability for baggage claims under the Montreal Convention. And for cargo is 22 SDRs per passenger, which is again the limit of liability for cargo claims under the Montreal Convention. One good example is Australia. Australia imposes stricter requirements than the European Union. If you look into passengers, EU is on 250,000. Australia increases it to 260,000 SDRs. You might say it's a very small increase. It is a very small increase, but Australia, if they could, they wanted to increase that limit to 725,000 Australian dollars. At the moment in Australia, this limit of 725,000 only applies to domestic operators, not to international operators. And they wanted to have exactly the same figure for international flights. What prevented them from doing so is that if they applied that to international flights, that would mess up the international system of minimum insurance requirements. Mess up on the basis that most jurisdictions that provide for minimum insurance requirement, they have a figure around 250, 260,000 SDRs per passenger. If Australia would increase it significantly, then that would create problems to airlines, specifically flying to Australia, and also general operators, aircraft operators, smaller operations that do fly to Australia. So they decided to keep the international flights limit to 260,000 SDRs. For example, if you look into Canada, the minimum insurance for passengers is 300,000 Canadian dollars, and in the US is 300,000 US dollars. The difference with the US is that the US requirement is that you need to have 300,000 US dollars per flight, but you don't multiply that figure by the full capacity of your aircraft like you do in Europe. You multiply it by 75% of your aircraft capacity. So if you have an aircraft of 100 seats, then the minimum insurance you need to buy is $300,000 multiplied by 75 seats. Whereas in Europe, it will be full capacity. Now, for third-party insurance, all is based on the maximum takeoff mass of the aircraft as recorded in the certificate of airworthiness. And here I have copied you the list. Essentially, I look into list 10, for example, which is easier. If your aircraft is more than 500,000 kilograms, that would be a 747, an 787, an A380. That's usually the maximum takeoff of them. Then you need to have at least 700 million SDRs, third-party liability insurance, to cover both your war and your non-war risks. And as you can see, the minimum insurance reduces as the weight of the aircraft is reduced. So if your aircraft is a 737, and I have given you the example here, a 737, let's say you have a 737 carrying 189 passengers and having a maximum takeoff mass of 78,249 kilograms. That means that you need to buy at least 47 million SDRs for passengers. That would be 189 passengers multiplied by 250,000 SDRs per passenger. You need to buy, and then for baggage claims, 243,000 SDRs. You multiply 189 passengers by 2,881. This one here per passenger for baggage. And for third-party liability, you need to have 300 million SDR for third parties, because the 737 has a maximum takeoff mass of 78,000 kilograms, which is category 8. Category 8 is for aircraft between 50,000 kilograms and 200,000 kilograms. Category 8, 300 million SDRs. Now, that sounds like a big amount, but is that a problem for airlines? For airlines, certainly not a problem. Commercial airlines, when it comes to passenger baggage and cargo risks, they usually buy something between 1 billion to 3 billion per occurrence. How much you buy essentially depends on your operation. Smaller commercial airlines will be closer to 1 billion. Major airlines like British Airways, Lufthansa, Etihad, Emirates will go closer to 3 billion per occurrence. That will cover passenger war and non-war risks, baggage war and non-war risks, cargo war and non-war risks, and for third parties, it will cover third parties non-war risks. The problems are with third-party war risks. No insurer will give you insurance for third-party war risks on a per occurrence basis. They're only gonna sell you insurance on an aggregate basis for third-party war risks. And the current situation, I have provided as best as I can on the slide here, layer 1, layer 2, and layer 3. So essentially, they will give you a first layer of insurance for third-party war risks, something between 150 to 250 million US dollars. With 150 million, very, very few aircraft operators can fly because they are below the minimum insurance requirements. What most airlines would do then, they will buy an additional layer of insurance, layer 2. And the insurers of this excess war layer will give you an additional 850 million in the aggregate. So for most airlines, they are going to have 1.5 billion for passengers, baggage, and cargo, and then we'll get 1 billion in the aggregate for third-party war. 1 billion in the aggregate will come 850 from the insurers of layer 1 and 850 from the insurers of layer 2. Now, if you are in this category 10, if you're an airline that flies 747s, 787s, A380s, 1 billion in the aggregate for third-party war risk is not sufficient. Because if you look back at the regulation here, you are in category 10. Category 10 requires you to have at least 700 million SDRs. 700 million SDRs is more or less 1.1, 1.2, 1.3 billion US dollars, depending on the currency exchange. So you need more than 1 billion in the aggregate. What they do, they buy layer 3 third-party war risk insurance, which is excess war layer 2. And essentially, they find insurers that will give them an additional 1 billion in the aggregate. So essentially, they have 2 billion in the aggregate for third-party war risks. 150 from layer 1, 850 from layer 2, and 1 billion for layer 3. Most airlines will not go into layer 3. They don't need layer 3. They will go 1 and 2 together. But the very big ones, the global operators, they will certainly have to go into layer 3 and have 2 billion third-party war risk insurance. Why, if you ask me, why do we have this distinction for third-party war risks? The answer is 9/11. That came up after 9/11 because of what happened in 9/11. Aviation insurance felt that we do not want to provide third-party war risk insurance on a per occurrence basis as we were doing before 9/11, because if something similar happens, we are going to have the same results. We're going to have to decline cover and again have another crisis and again find new investment in the industry, which we don't want to do that. So that's how they protect their investment in third-party war risk insurance. My final slide about compulsory insurance. If you're a regulator, if you're a civil aviation authority, how do you check your insurance of operators? Most civil aviation authorities will ask any airline that flies, whether it's a domestic airline or an international airline, to submit a certificate of insurance, essentially a certificate from your insurance broker stating what kind of cover you have received. The sophisticated ones, for example, like the UK one, they have a statutory provision where essentially they retain the right to request a copy of the policy you have. If they feel that there is something dodgy going on with your insurance certificate, they have the right to ask you and injunct you to produce the policy of insurance so that they know exactly what you have bought. They rarely exercise it, but they have the option. Another way of controlling what kind of insurance the operators take is follow the example of the Australian Civil Aviation Authority. And Australia has a very sophisticated provisions in the Civil Aviation Act, where essentially it goes back to what Jose Ignacio discussed. And they said that, look, we know that most of you would buy bodily injury insurance, but we don't want that. We want you to buy personal injury insurance, essentially to cover claims that qualify as, for example, mental distress, post-traumatic stress disorder, and so on and so on. So that's one of the major developments. It's not so much such a unique regulation anymore. Why is it's not anymore unique? Because if you look into any single major airline that you have, and if you look into their insurance policy, the insurance policy will say, will keep repeating bodily injury, bodily injury, bodily injury. But if you go down to how they define bodily injury, for commercial airlines, this definition of bodily injury will include mental injury. So it will include mental distress, PTSD, and so on. So they use the term bodily injury, but they define it to cover personal injury. And that would be used in most commercial airlines that fly around. For general aviation, it's a very different story. If you have a small operation, probably they won't give you bodily injury. You are going to have to buy insurance on a personal injury. Sorry, they won't give you personal injury. You will have to buy insurance on a bodily injury basis. The other issue that the Australian regulator does, it's a relatively unique provision where essentially it says that, look, if you insurers have a reason to avoid the policy because, for example, the airline or the aircraft operator has breached a warranty of geographical limits. So essentially, you are flying in an area where you are not supposed to fly. You are not allowed to fly. In most policies, there would be a warranty. It would be a breach of a warranty. Or if you overload the aircraft and so on, and there is a breach of a warranty there. They provide that you still have to pay out the victims. You still have to pay out the compensation to the victims, and then you get a right to go after the airline to recover the amounts of money you paid to them. This is a provision that is solely aimed to protect consumers and to protect victims of major crashes. from insurers saying, no, we don't provide cover because the airline screwed up with the geographical limits, for example. Now, to deal with that, the insurance market in London has provided endorsement, AVN 57A. You can easily find it available online. It's a public document, where essentially they do provide cover for personal injury, but they also say in there that in compliance with the Australian regulators, we are going to pay compensation to the victims despite being a breach of a warranty in the airline's policy, but then we retain the right to go after the airline to recover whatever amounts we paid. Now, what else civil aviation authorities do, or they have the right to do, certainly in the UK and certainly in Europe? They have the right to deregister your aircraft if you're a domestic aircraft operator, if you don't comply with the insurance requirement, or they have the right to cancel your permits to fly if you are an international operator. They have the right to prohibit your takeoff if they feel that you don't carry enough insurance, and they can even do that as an emergency measure and then get an injunction. So it's not getting an injunction from court is not a prerequisite, because that would delay the situation. So they have the right to essentially issue an order stopping you from taking off. And also in many countries, certainly in the UK, there is a criminal offense if you are the managing director or the pilot of an aircraft that doesn't have enough insurance. They haven't exercised it in public yet, but the UK Civil Aviation Authority has come close a few times to actually filing a claim against an aircraft operator for not having enough insurance. And in that respect, I don't believe that fronting is a solution. I know Colombia had fronting for several reasons. Fronting won't help you retain police airlines about the insurance they have. Fronting only is a way of, yes, maybe supporting the local industry, but as experience suggests with aviation insurance risks, the risk is not kept in the local, in the domestic jurisdiction. It's kept in the sense of, on paperwork, but there is certainly reinsurance in London or in the US. And in many Latin American countries where fronting remains the law, you can see that, yes, the local insurer maybe will retain 1% of the whole risk in essence, but 99% of that goes back to insurance in London. So you don't police anything. It doesn't solve anything. And for those of you, and Jose Ignacio knows quite a bit about that. If you look into the GOL accident in Brazil a few years ago, yes, there was fronting, but the local insurer in Brazil kept 1%. 99% of the compensation and the money came from London insurers. That's what I want to say about compulsory insurance. I'm very aware of the time. Probably will extend a bit the seminar, but thank you very much.
Thank you again, George. Very insightful explanation. And then I would like to just give you some brief words in regards with compulsory aircraft insurance in Colombia. And I will begin exactly with the issue that George was mentioning at the end of his presentation. And that's the one that is related with fronting, because this is very much connected with our understanding of compulsory insurance or not in Colombia. So before moving on to the minimum requirements in terms of securities, because it is not insurance, and I'm already moving a bit to the what we'll be covering in the future in regards with this topic. I will not refer to compulsory insurance, but to the obligation to provide or to buy or to have proper securities to operate a commercial aircraft, because it is not only for insurance. So first, in terms of marketing, and under Law 13288 of 2009, it is possible for foreign insurers to offer aviation insurance in Colombia and to Colombian residents. But quite unfortunately, the law was not at all technical and did not consult the reality of aviation insurance. And it only allows foreign insurers to come to Colombia and offer insurance, aviation insurance, without being incorporated in Colombia, as long as that coverage is related with international commercial aviation. It can be whole and liability insurance, but connected with international commercial aviation. And insurers do have the obligation to register themselves with the financial superintendents, which is the insurance regulator in Colombia, and they have built a separate registry for these types of insurers, foreign insurers offering insurance coverage in Colombia, which is the RAIMAT. Quite unfortunately, this doesn't work at all in practice, and it does not work at all because, once again, it is only available for international commercial aviation or to insurance associated with or connected with international commercial aviation. And unfortunately, once again, the law was not technical at all, and it was not technical at all because the market does not offer insurance coverage just for international legs or international flights. It offers insurance for the entire activity of the operator, and it will just determine certain geographical limits, but nothing else. So this is not used at all. However, there is a second alternative, and this is done in the opposite way. That means that Colombian residents may buy insurance abroad. So in order to differentiate this alternative from the first one means foreign insurers come to Colombia to offer insurance. They do have a market activity in Colombia, or they do approach Colombian residents to offer insurance. That's the first one. The second one is a different hypothesis, and that hypothesis is based on the fact that the Colombian resident will approach the insurer. And if the Colombian resident approaches insurers, then any Colombian resident will be able to buy any insurance coverage, except for certain risks that must be written in Colombia. And those risks that must be written in Colombia are those related with, first, social security, second, those named or understood to be compulsory insurance, and this is very relevant for aviation, and three, whenever the policyholder, insured, or beneficiary is a public entity. So in regards with aviation, we will need to focus on these two last restrictions. The first one will be compulsory insurance. Thankfully and rightfully, I will say, the financial superintendent, which is the insurance regulator, has arrived to the conclusion that the only compulsory insurance in Colombia currently available is the accident for transit accident insurance, the SOAT in Spanish, which is for vehicles, for cars and motorcycles, and that is completely regulated. Therefore, the state will determine which premium needs to be charged, what risks are being covered by that insurance, and so on. And therefore, that is the only compulsory insurance that currently exists in Colombia. Therefore, aviation liability, and so we are already moving into liability, is not part of that compulsory insurance. And therefore, that means that a local resident will be able to buy insurance directly abroad and basically in London. And second, when the policyholder, insured, or beneficiary is a public entity, therefore, when public entities like the Colombian Air Force or the Ministry of Defense or the National Police or the National Army or any other public entity for their aviation risks is obtaining insurance coverage, that insurance coverage needs to be written by a local insurer and cannot be written by a foreign insurer. Those are basically the restrictions. And in regards with the minimum, George, if you could please move to the next slide. Yes, thank you. In regards with compulsory insurance and aviation, Article 1900 of the Commercial Code sets forth the obligation for commercial operators in regards with securities and proof of securities that shall be provided to the Civil Aviation Authority in order for the Civil Aviation Authority to approve the operation of an aircraft. And what the rule states is that the operator is free to choose among four alternatives of securities in order to demonstrate that they have covered these risks. And we will see which risks on the next slide. But first, they can do it via insurance, they can do it via a letter of credit or a bank warranty. Third, they can use a cash deposit. And fourth, they can use any other type of securities that as long as they are traded in the stock exchange. So any of these four alternatives will be acceptable for the Civil Aviation Authority to approve the operation of a commercial aircraft. So if we choose any of them, if the operator chooses any of them, it will need to comply with this minimum requirements for commercial aircraft. So it needs to buy coverage for the liability limits set forth in the commercial code. And if it is an international air carrier, it needs to buy insurance, or it needs to provide proof of, or to produce proof of adequate insurance coverage pursuant to the international conventions related with aviation liability regimes, basically Warsaw, Montreal, because Colombia is not party to the Rome Convention. So in short, limits need to, the insurance limits need to be aligned with the liability limits, but calculations may be made with 50% of the aircraft's capacity. So therefore, the insurance coverage may be a little bit lower. Which risks need to be then insured if we are choosing the insurance alternative in terms of security? First, damages to third parties on the surface. Our commercial code is quite old in terms of regulation. It was drafted back in 1958 and then adopted in 1971. And the aviation rules were drafted in 1958, then adopted with the commercial code in 1971 and have never been updated. Therefore, they are determined in terms of grams of gold. So all limits are determined in terms of grams of gold, which is quite variable. They tend to vary very frequently, and they are sometimes a little bit more difficult to calculate. Quite unfortunately, this is what we've got, and all limits are based on grams of gold. Therefore, and very much as George was also explaining it in the European case, in regards with damages to third parties on the surface, those limits will depend on the actual maximum takeoff weight of the aircraft, which will be determined in turn by the airworthiness certificate. And for narrow body and wide body aircraft, we have two categories basically, and those are the ones that I'm presenting in the slide. For passengers, there is a maximum limit of 25,000 grams of gold per passenger for injury or death cases. Therefore, that's the minimum insured amount that will need to be demonstrated by the operator. Hand baggage is included because our rules, they do not make any difference in regards with baggage. So they are part of this, and therefore proper coverage for hand baggage and checked baggage needs to be produced. So in essence, and in Colombia, aviation insurance, liability insurance is not compulsory. And it is not compulsory because you have many other alternatives to insurance in order to demonstrate that you have covered those risks, and insurance is just an option. But if insurance is the option, then certain minimum requirements need to be observed for convincing the aviation authority that the commercial aircraft can be safely operated. So with this, we'll leave the floor back to George and Diego.
Thank you, Professor Garcia Arboleda. I will politely ask you to stop sharing the screen for a moment so we can start. Well, actually, we've prepared also a small presentation from our speakers around the aircraft financiers. But since we have time restrictions, we won't be able to do it, sadly. But we're gonna try to ask the most sensitive questions that have been raised by our audience and other attendees. So first of all, well, I would like to ask our speakers, this will be raised for both of you, from the local perspective, especially Professor Garcia Arboleda, and from the international perspective, George, which are the challenges of handling with aviation insurance complex claims? Well, some of them, just some of them. that you would like to share with us?
George, if you would like to begin, yeah.
Okay, I'll do it quickly. I mean, although I haven't practiced for quite a few years, I think Dan in the audience is more current than I am. But I think the challenge are the same. That I don't think at the moment the market is more challenging than 10 years ago in terms of claims. I think insurers, no matter what they argue and so on, they are not so concerned about passenger claims anymore. They are willing to give 2-3 billion per occurrence cover for passenger claims and cargo claims and baggage claims. So in terms of statistics and quantification of the risk, they are okay with that. Major losses certainly affect them. Major losses affect them not so much because they don't predict them or that they're not aware of what has happened, but because we'll go back to what we discussed at the beginning. It's a very small pool. It's a very small pool globally. And one major loss of an aircraft worth 70, 80 million with full passenger claims, 400 people claiming against you, especially if they find jurisdiction in the US to claim against you, certainly it's a significant bill. And although they certainly have the money to pay the bill, they need to recover the losses. And because the pool is small, they need to recover the losses globally. So in that respect, total losses, it's difficult to manage. And I think one of the things which you don't see in other markets, like, for example, the shipping market that is very unique to aviation as a situation, is because it's a small pool and it's a small set of insurers, subrogation actions do not happen very often, and they're not so familiar, they're not so keen to exercise subrogation action as they do, for example, in shipping or in energy insurance. Because, I mean, in many respects, you can have a situation where the insurer of the airline is the same as the insurer of the manufacturer, components, parts, or engine, or anything. So in that respect, there's a bit of a more understanding that, yes, we share the losses if we think there is a product liability issue, but we don't actually chase each other in terms of subrogation actions, which are anyway expensive. But that, again, raises issues if you are acting from an airline point of view and you have a claim as a result of a total loss, and you get your money from the insurers for the claims of passengers and third parties in the hull. Then one of the questions that you have is, how am I going to recover my uninsured losses? And if there is a component parts manufacturer in there, okay, I'm going to bring an action against the component parts manufacturer for my uninsured losses, my consequential losses. But when the component part manufacturer is sued by the same insurer as you, there are issues. And as a lawyer, you need to balance those issues. You need to deal with this claim from a point of view of the airline, which usually this type of situations you don't encounter in shipping or in marine insurance, where the situation is more aggressive and it's more, I'm going to recover my money and I'm going to go after you no matter what. So in that respect, I don't think we have issues with limits. I don't think there are financial issues. Even with third-party liability war risks, the way that they are providing insurance now, with limits being on an aggregate basis, the market is okay. It's all right to cover any kind of claims. Weapons of mass destruction, if we ever have any situation, could stretch the capacity of the market, but that's a discussion for a different day, when and if it happens. And overall, just one final point, I think no matter what people have ideas about insurance, and there is a common perception they don't pay, in aviation insurance, it's not the same perception. And I'm not discussing it because my past comes from an airline/insurance point of view, but with global airlines, you rarely see an insurer denying cover or not paying cover in claims. They don't. You have incidents in the past where there was suspicion of suicides and everything, they covered. Question about German Wigs, after the German Wigs accident, you had a lot of news reports that insurers are not going to cover because it's willful misconduct. No, they are not. They will cover, because in most airline policies, you don't have anymore the willful misconduct exclusion. You have the exclusion of illegal act with the consent and under the direction of the board of directors. So the threshold is very high. So they are not in the business of, at least commercial airline insurers, to deny cover or not to pay. But always is a question of quantum. How much money we're going to pay for passenger claims. Thank you.
In addition to those challenges raised by George, subrogation is one of them. Subrogation in aviation insurance is quite exotic. And when it happens, sometimes you can find that that one of the insurers that is exercising that subrogation is eventually party to the pool of the defendant's side of insurers. So this tends to be settled or sorted out if subrogation is ever triggered. The second one will be not with airlines, but with smaller operators. Smaller operators, and as George correctly mentioned it, I mean, airlines are usually able to obtain a huge amount of liability coverage, but that is not the case with smaller operators. And smaller operators, they often have very small or low, insured amounts in terms of liability, and sometimes the damages that have been caused by an aircraft loss tend to be higher than that. So as a lawyer, sometimes it is quite challenging, or sometimes no, it is quite challenging to try to settle those claims within the very reduced insured amount, considering the operator is a small operator, is a small company, and does not have the financial strength to pay the actual compensation for the actual damages that have been caused. So that's a real challenge, and that's what happens with the small operators. And that's because sometimes the regulation, that's what happens in our country. Regulation tends to be very relaxed in regards with limits, and that needs to be changed, and that needs to be addressed at some point. But that's an issue.
If I may add on Jose Ignacio's, I think the one thing I missed from private practice, I didn't have any experience with general aviation claims in London, because if you want to enjoy the application of insurance law in aviation, you have to deal with general aviation claims for anything from parachuting to small aircraft. That's when the real cover issues are, not with airlines per se.
All right, thank you both. There is a specific question from our member Juan Camilo Delgado Franco, who asks, could you talk about the consequences of the COVID-19 pandemic on the aviation insurance? Just, it could be a small approach.
I mean, I think I touched upon it at the beginning. I think COVID, yes, as I said, the general perception is that because aircraft are not flying, there will be less of a risk, and that premiums are going to be reduced. And what several insurers have done during this year, before the new renewal in December 2020, they have made allowances in terms of paying of the premium and more installments and so on, and return of premium in some respects under several clauses. But we don't expect, and that's what at least the brokers report at the moment, that we don't expect that the premiums on a whole, on an average, as charged in the commercial airlines, will drop as a result of COVID. Yes, the risk is lower, less aircraft on the air, but there is also the risk of aggregation of losses at airports where the aircraft are parked if someone blows them up. And usually those are airports that are not, as I said, very secure. You don't leave aircraft flying around, hundreds of them at Heathrow. You park them in somewhere in the middle of nowhere. And also because the idea is that, okay, if we set the premiums down on the base that COVID has reduced the risk, what if the industry comes up back to normal standards in the summer? So then we are stuck with the increased risk, but the premium doesn't reflect the actual risk of operation. So in that respect, it doesn't seem that they will have the premiums will have a downwards slide. Plus, from a point of view of insurers, the London insurance market, the cost-cutting exercises are still ongoing. They still try to bring their affairs in order, not just aviation insurance, but as a whole portfolio of insurance risks.
Right.
Thank you.
There is a specific question also for Professor Garcia Arboleda in relation to the Lamia flight accident. And they say, well, we all know this accident was happened transporting a Brazilian soccer team who was about to play a soccer team in Medellin. And more or less what he's asking is, can you share with us who is supposed to be liable in this case, taking into account the exclusion of geographically limitations, and also by which law it will be ruled, taking into account that the accident occurred in Colombia, the Brazilian team or the victims were located in Brazil, and the airline was from Bolivia.
Perfect. This is a fantastic case example that quite unfortunately happened in real life. But as it is of public knowledge, there was a contract for carriage in which La Mia, a Bolivian operator, was the air carrier. And that contract for carriage had the obligation on La Mia's side to carry passengers from Brazil to Colombia. The Brazilian Civil Aviation Authority, the ANAC, as far as I understand, did not approve a charter flight to be operated by a Bolivian operator directly to Colombia. That would have been under a scheduled basis, that would have been a 7th freedom of the air traffic right. And the Brazilian authority did not approve that. So therefore, they hired another carrier to carry passengers from Brazil to Bolivia. And then with their own metal, their own equipment, they flew from Bolivia to Colombia. So this means that considering both Brazil, which is the place of origin under the contract of carriage, and Colombia, the place of destination, actually it was a great stopping place, because then they had to carry the passengers back to Brazil. So Medellin was an agreed stopping place within the contract for carriage. Therefore, the liability regime is governed by the 1999 Montreal Convention, considering both Colombia, or actually Brazil, which is the place of origin. Brazil is party to the 1999 Montreal Convention, and therefore that's the liability regime to govern this loss. That means that from the passenger perspective, the airline is liable, and under the 1999 Montreal Convention, and pursuant to the liability limits that were available back in 2016, the airline is strictly liable up to 113,000 SDRs, special dwelling rights per passenger, and it may be liable on a fault-based liability regime on any amount exceeding 113,000 SDRs per passenger. So the issue here, and the issue with the small operators, first there was a coverage issue, as it was also publicly known. Insurers raised an issue in regards with coverage, and as George was mentioning it, this happens with small operators. It does not happen with large operators. So there was a coverage issue, and it was raised by insurers, and quite unfortunately and quite sadly, this means that the operator is liable, but the operator will always be liable, but the operator will be financially exposed, directly exposed. And when there is a small operator, then ultimately no one will have funds to pay for these types of losses. So this is very much the situation with the La Mia, and quite unfortunate, of course, because the operator basically disappeared with the aircraft.
Thank you, Professor. Isabella, from our audience, she is very interested in how the state contracts their own military aircraft insurance, and she had like 2 questions related to it. She asks, first, if there is any additional insurance that must be purchased to the hull and the liability insurance. Also, where the legislation could be found related to this topic, and finally, how we can do it more efficient.
George, I don't know if you would like to. Yeah.
Go ahead, Jose Ignacio. I will add a few points at the end. That's okay.
Perfect. I will simply say that from a local Colombian perspective, it is usual, it is normal, it is a standard practice that state operators do insure their hull, not only their property, but they also insure their liability. The rules we were reviewing from the commercial code are only applicable for commercial aircraft. There are all rules for civil aircraft, but there is no obligation to have any security or to have any insurance or to have any other type of guarantee to operate a state aircraft. However, public entities in Colombia that operate aircraft, they do have liability coverage. And it operates in a very similar way, not to say in exact way, as it operates in regards with civil aviation. And it is basically written by the London market, in essence, via fronting.
Okay. If I may, I'm not very familiar with military aircraft and so on. My experience is that, for example, UN years ago, they did not necessarily go into the commercial market to buy insurance for their aircraft, but now they do buy hull and liability insurance like any other United Nations operator, because they had their accident in Africa, especially, and they were concerned about how to pay claims to their employees and so on, and other people that were carrying on their behalf. Now, for hull insurance, one comment I want to make, again, about commercial airlines is what they do to reduce sometimes the premium is that they split their fleet. So in some respects, they buy, especially hull war insurance, they split the fleet in the sense they buy, for part of the fleet, they might buy the full version of hull war risk insurance that includes weapons of mass destruction. And for parts of the fleet, they buy the version, the D, the LSW 555D, that excludes parts of the risk of weapons of mass destruction. Or again, they go with value. They don't insure all their aircraft for hull war, especially if they own their own aircraft. They select which ones they want to insure. So it's again for them, it's a financial question that, okay, if we have leasing, we need to buy that, and the lessor probably will identify which version of hull war they want to buy. But when it comes to aircraft they own, they can do different tricks like non-insurance or split LSWs 555B for parts and D for some other parts. If that answers the question.
Thank you very much. I will raise our last question. It is a common question that we often do in our forums, especially for those who are approaching for the first time to aviation insurance. Which book would you recommend to get this first approach to aviation insurance?
To George.
I will ask George to a book in English and Professor Garcia Arboleda for a book in Spanish.
There is if you want a real down-to-earth introduction to aviation insurance, not law, but to aviation insurance, I think there is a book out there, I think it's called Plain Man's Truth, written by a broker in London. I can find it. I can find the link and send you, Diego. It's a short book. It's around 90 pounds worth, like that small. But when I read it, and I had already experience with aviation insurance, it put everything into one concise piece of work. As I said, it doesn't deal with law, but it gives you the structure. It gives you the practices of the London market for aviation insurance, for airline insurance. And I think if you want to be introduced to the aviation insurance as an industry, it's certainly one to provide. Now, if you want the law, there's only one available, and I think it's the most comprehensive one, to go and buy Margot's Law of Aviation Insurance. It's now, I think, the third version, written by three very well-known authors, one barrister in the UK, a Swiss insurer, and an American solicitor, lawyer. They have updated, and it's the most comprehensive book you can buy about the law.
Margot.
For those of you that you are getting qualifications to become insurers, though, if you are in the Chartered Insurance Institute in London or other chartered insurance institutes around, the Chartered Insurance Institute is producing every year a handbook on aviation insurance, and it is the book that you need to read and pass when one of the modules is aviation insurance. And if you want to add and pass it, that's the book you read. If you ask me, that's a very good combination. It's a very good starting point. The problem with that is that I'm not sure they sell it to non-members. So if you are a member of any chartered institute in the UK or in Canada or in Colombia, you might be able to buy it. But if you are not, I don't think they sell it to non-members. You have to do the course and buy it, or being a member already and buying. So these are the three options: Plain Man's Guide on aviation insurance, Margot certainly, and the CII, the Chartered Insurance Institute handbook on it.
Thank you so much, George.
I will say, Diego, first you need to talk to Professor Leludas first of all, if you want to understand aviation insurance, and ideally, as you did it, take a course with Professor Leludas. That will be the most important and significant decision you can take. And in Spanish, the only book to my knowledge, I know it is available, is the one written by Maria Jesus Guerrero Lebrón. She's a Spanish lawyer. She's basically an aviation lawyer. She's a professor as well, and she's very competent. So I would recommend her book, and it's Seguro de Aviación, if I'm not wrong. I think it is published by one of the most well-known editorials in Spain. I can't remember the name right now, but as far as I understand, it's that one. And to my knowledge, it is the only one written in Spanish.
Okay. Thank you so much. Well, I would like to close our event being so grateful to you two for your time. It was an awesome event. It was a unique opportunity to learn from two international experts, as you have seen today. And we are really, really proud and happy of having shared this time with you two.
I mean,
thank you very much again.
Thank you, Diego. And I think it's fantastic what you're doing with the new generation of insurance lawyers. And I hope it goes well, and you do as many seminars as there are insurance topics around. And I know I have a soft spot for Colombia, although I have never visited. My soft spot comes from a BBC documentary a few months ago praising Colombia as a country, and I watched it, and I thought, before even meeting you, and I thought, wow, that's a place I need to visit. And then I met you in Amsterdam, and yeah, we had a
and you know you're
circle.
Welcome here, George. And just before leaving and giving the floor to our association authorities, I would like to say to George, you remember that time we met in Amsterdam and we were watching soccer? Just to the audience to know, I want to him because we bet that Harry Kane will score more than 5 goals in the Russia's World Cup, and he did, and he was the top scorer, right? You remember that, George?
That was the bet we had. That was the bet we have in Amsterdam.
And since I know you're a big fan, being so thankful for your time from Young Acoldese, we have a gift for you, George.
Thank you.
You will love it. It's a Colombian national team jersey.
Nice.
I will deliver it to you to Swansea. I hope with the COVID restrictions, it will be very soon there, so you can wear it for our next South American qualifiers.
I will wear it and send a photo. And send a photo. Thank you very much, guys. It was my pleasure. As I said, I love speaking to the younger generation of lawyers, of students, academics, and everything. And I very much, as I said, I think you are lucky to have people like Jose Ignacio and Diego to take such initiatives. So you don't see it that often in many other countries, and I think you should be grateful to both of them for that. Thank you.
Thank you again, George.
Thank you, George.
Pleasure to have you here.
We will wait your picture with our national jersey. You will see. So, Dr. Nicolás, por favor.
Gracias, Diego. Thank you very much, George, for your presentation. It was wonderful. It was an honor to have you here in Acoldese. Doctor José Ignacio, mil gracias por su presentación también. Excelente, como siempre. Doctor Diego, muchísimas gracias por la organización del evento. De verdad que una excelente muestra de aprendizaje para los jóvenes abogados en Derecho de Seguros y en Derecho Aeronáutico. Entonces, una excelente forma de iniciar el día para Colombia en esta mañana de martes. A todas las personas que participaron en el evento, muchas gracias por habernos acompañado. Si alguien quiere repetir la tertulia, lo puede hacer en el canal de YouTube de Acoldese. Muchísimas gracias a todos por su presencia. Esperamos hacer un evento más antes de que finalice este año 2020 de Acoldese. Les estaremos informando con suficiente antelación para que estén preparados. Entonces, nuestros panelistas, nuevamente, muchísimas gracias. Que estén todos muy bien en nombre de la Asociación Colombiana de Derechos Seguros Acoldese. Una feliz tarde. Hasta luego a todos.
Bye bye.
Thank you. Bye bye.
Thank you, George. Take care.
Thank you.